morning. I didn't even fake that. Even when I was muting the mic, I was still in the zone. Anyways, good morning, everybody. Welcome to Forex.Today. This is your daily Forex trading strategy session brought to you by TradersWay.com. George Foreman versus Steven Seagal. I wouldn't even, no, that wouldn't be a proper matchup. No. Before question, on your bajillion monitors, can you take a window outside of the platform somehow? No. Well, you can. You can buy software to do that, but I don't have that. You stretch your MT4 across all the screens. You get it? Oh, yeah. So you grab the monitor, the platform, you go all the way there, okay? And then what you can do is set up all your charts in each individual window, right? But then save that as a platform, as a workspace, a profile, sorry. Save it as a profile, because there's sometimes when you don't want all your screens on, right? Like you're just kind of keeping it on in the Asian session or something. You might want to turn some of your screens off, right? But then you have sort of a different setup. Or you just want the top, the top two rows or something, right? So what you can do is change the shape of your MT4 platform and change the profile to fit that shape. So all of a sudden you're like, let's say you have your favorite pairs up there and only the top, maybe sometimes, like for example, sometimes I'll turn 12 monitors off, right? 6 on the left, 6 on the right, and I just want the middle one on because that's where I'm sitting. So you might want to have a setup where you shape it just to that, and then you go to a profile that loads charts just in that shape. Because if you loaded the typical 18 screen version, it's not going to fit properly anymore on that. So you know what I mean? So you create different profiles for different situations. But you could also create different profiles, like maybe the side charts are all, typically I have them medium to long term. So I can look over there and I'll say, oh, look at that, pound yen is at support. Then in front of me, I'll bring up pound yen so I can do the 1 hour, 15 minute, and 1 minute, for example, right? So I zoom in front, and that's where I start scalping. But you might be in a certain mode where, let's say, important news comes out and you want to see sort of everything on the short term. You should have a profile for that. So you could just pull up a profile that's a short term only, and it changes 47 or 147 charts. And you have different setups. Yeah. Yeah. Stretch across the TV, and what, do you have a 4K TV or a 1080? 1080. So I have a laptop, 10-inch laptop, that is double the resolution of your TV. And that's where a lot of people get all messed up. They're like, I have a 72-inch TV. Like, yeah, it's 1080p. I don't care how big the TV is. It's going to hold the same. In fact, my 10-inch laptop could hold twice as much, right? It's all about the pics, about the pixels, as Elias says. But anyways, so this laptop that I'm broadcasting now, the MT4, that's more than 1080p. But again, I have a 2K. I took it to South Africa, but it had some problems there with the Windows and the software thing. But I think I took it somewhere else, and actually, oh, Hong Kong. Yeah, so I'm in Hong Kong running the webinar off my tablet, which was 2K running Windows, and I can flip it over and reboot it as Google, or as Google Chrome or whatever, right? So anyway, so I was running Windows 10, doing MT4, and broadcasting a webinar from my tablet, which is like, oh my God, from the 118th floor Sorry, 116th floor. Right, with Daniel in the other room. Right, Daniel's like, he's eating, he's having a few drinks. I'm like, dude, Daniel, you've been at the bar for like all day. He's like, yeah, I like it here. Mr. Daniel, would you like some more crab? Yes. Yes, more crab. Anyways, yeah, in the swimming pool. So anyways, it's kind of cool. So it's all about the resolution, right? But anyways, so that's how I do it back there for whoever had the question. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Risk capital, y'all. Or other people's money. That's even better, right? Oh man, I lost a ton of money today, but at least there was somebody else's money. Yeah. And then your client says, hey, have you ever seen the truck stop halfway to Abu Dhabi? Like, no, I don't want to go there. No, come on, it's great. I've actually been there. Does anyone know where I'm talking about? You can get off there's like a gas station in the absolute middle of nowhere. There's actually sand dunes that are 7 stories high. They have some dirt bikes. They have a falcon you can feed. Yeah. They got some cool stuff. You want to ride a camel? Boom! $4 the hard way, right? Yeah. Then they also bury bad traders up there. Like, yeah, I got to fill up number 7, and I got to bury 2 bad traders. Like, all right, well, it'll be 57 dirham for the gas, and you got 2. Well, we have a special. Yeah, 2 for 10 dirham. Yeah, just bring the shovel back. Here you go. You can go bury them. Like, there's no room. There's bad traders all over the place. No, farther in the dunes. Some of you guys have no idea what I'm talking about. That's fine. Hey, we do these sessions 7:30 in the morning, Monday through Friday, here at Forex.Today. Except tomorrow, right? Tomorrow is non-farm payrolls, and I will be at FX Street for the, I don't even know. I've totally lost count. Is it 138 or 148? 139 months in a row? Oh yeah, Peter's like, yeah, you don't want to visit that place, Peter. Actually, I have a great story. An old FX boot camper / client / friend of mine. He takes me out there, and it was great. It was great. And he's like, "Hey, I arranged for a private dune buggy tour of the sand dunes, which is like a very big touristy thing, right? So you get there, and that's where you meet your Land Rover, right? And there's like 7. They're big, right? There's enough for 7 seating for 7, but including the driver, so you'd think you'd get 6 people there. So they cram about 9 tourists into these the SUVs, and they drive up the side of the sand dunes. And I mean, it's really crazy stuff, right? They arrange for me like, boom, we get our own. Yeah! So we get a private driver and a private thing. And we're zooming all over and zooming all over. It's great. Then he's like, hey, do you want to go snowboarding down the sand dune? I'm like, yeah, I totally do. So we go to the top, and there's a guy with one snowboard, and there's a line of like, at least, I think about 2 trucks worth, right? So there's like 14 tourists standing in line for their chance. We go right up there, boom, get out of the way, give this guy the snowboard. And they actually spray it with cooking spray, no joke. And they're like, you go down. I'm like, damn, it's like actually, yeah, we're actually 7 stories up, and it's like, boom, straight down, right? Like, yeah, but I can do this. Spray it on there, jump on the thing. Not a good thing to do when you're like 40, right? And then, whoo, nice. I made it about, I'd say about 3/4 of the way, and then you slow down and it drags, and all of a sudden, whoa, you do a couple of somersaults, get up, fan picks me up, boom, we're out of there. It was great. Yeah, all the sweet tourists, they're like, who's that a-hole? I've been standing here 20 minutes. Like, that was Wayne McDonell. Nice. So anyways, let's get going. Yeah. You did that in the Atacama Desert? Where's the Atacama Desert, Chuck? I know a lot of deserts. I got a big brain, but I don't know where that is. We have BOE in 15 minutes. You want to cover that, Artem? Chile. Really? Cool, man. You guys are cool people. I need to get me to Chile. I will drink every drop of Carmenere. I want the good stuff. I want the old vine Carmenere. Yeah. All right. So we'll do a little bit. Why don't we just focus on the pig? Okay. And let me get Trade the News going in the background. Trade the News I've been using for probably about 12 years, 11 years.
And Saunders both have been calling for a 25 basis point.
All right. So we'll come back to that. Don't let me forget. We have that. Okay. All right. But anyways, Carmenere is only grown in Chile. Can't get it anywhere else in the world. All right. So we'll talk about this. I thought we had this drawn slightly different. I'm not entirely sure. Maybe we had it on a different chart. But I do remember talking about this being rangy. Must have drawn it with the drawing tool, right? But I said what you want to do is treat this as a range until she breaks out. Okay, but if you have it set as a range, it will always be a range until it breaks. If it's a trend, it'll always be a trend until it breaks. One of the things you have to train yourself to do as a currency trader is always be right in your mind. Like, there's no ambiguity. Ambiguity. There you go. Ambiguity. It's like, this is a range. It's going to hold. I know it. 100%. Carmeniere's not what? Carmeniere. Well, you would shit. You have to put a. Well, in America, the Carmeniere. Really? Carmeniere? Carmeniere? Is it Carmeniere? Gee whiz. Yeah. You're going to have to email me then if your wife knows everything there is to know about Carmeniere. But you should moderate. You should just for transparency. So anyways, we identified this as like, look, this is the conservative target. I think we had a conversation about that specifically, right? It's rangy. It's also the conservative target. Now, you can be aggressive, you can be conservative, but do you need to be aggressive in a range? I don't know, probably not, right? Well, 24 hours has passed, and down she goes. Now, what's the other setup that you see here? One of the other things we talked about is, when do you decide to be a bear? And I said, well, lower low. And I think we all talked about it, lower low, lower low, low. Great, so what does that set up? Once you get the lower low, it's still not a trigger. So like hitting the conservative target is not necessarily, it could be, but it doesn't necessarily have to be a trigger to sell. So the next thing you wait for is a lower low. But the lower low is definitely not a trigger to sell. It's a trigger to set up the sell. and I know I don't even have to ask this because I know I've burned this through your brain. But then once you have that, you set up the lower high roll reversal trade for the 1, 2, 3. Right? I know you guys can, right? I know you guys can do this in your sleep. Okay? Okay? So let me just ask you then, did I, and it's okay if I'm wrong because I cover a lot of charts, right? So you might specifically be trading this, and you might be right on this. You might remember what I said yesterday, okay? More than even I do. So did I or did I not discuss a setup like this? Specifically because of the range, specifically because of the pivot. Like I said, if I didn't, it's okay to say it. So I'm not fishing for compliments is what I'm saying. We just need to because we're analysts here. We need to analyze. We're trying to predict the future, right? So we're looking at a lot of different variables, a lot of different moving pieces, right? It's like catching a sparrow out of a swarm of sparrows. You're like, whoa, that was a head and shoulders. Woo, right? I don't even know what that means, but that was great. Nobody else? The M4, the conservative target. We called it the conservative target. Okay? And we had it over here. So I might have it on a different chart, but I thought it was this one, so I had to redraw it. But that is topish, right? That is the M4. Now there's all kinds of things. Well, it could go up a little higher and hit this pivot. Yeah, it could. It can go up a little higher and hit this pivot and then collapse, right? So it could be this pivot, this pivot, this pivot, which means your stop should be above those, right? And that's all that means, right? But I said, the conservative target, this might ring the bell here. The conservative target for the short is the weekly central monthly M2 cluster. But if you're lucky, it goes all the way to the bottom of the range, which is more like whatever this is, 131. You guys remember that now? I think I drew it with the drawing tool, right? So I said, that's the conservative target for the short, but hopefully it goes down here. But we just don't know. And that's why you're know when to hold them, know when to fold them. Do you really need the extra pips? This cluster is important. It's also the counter trend trade. Maybe that rings a bell. The counter trend trade is you hit this early in the week, your target is the weekly central. That's straight out of the swing trading course, right? Just boom, one of the two counter trades that there is. There's only two. That's one of them. So it's not like I'm making it up today to say, well, yesterday, now I need to look at. No, we talked about it yesterday. And since there's only two counter trend trades, it's a hell of a coincidence that we're on our way to the target, right? Yeah? Yeah, I did say I don't like doing it. Why would you want to make a living counter trend trading? Right, Brendan? By definition, wouldn't you just make more money trending than counter trending? And I also explain in my book that it's twice the risk for half the reward. You understand? Yeah, I love counter trend trading, right? I get half the reward for taking twice the risk. It's awesome, right? Whoa. The other way of looking at it is you could have just bought it on Monday, made your 200 pips, and you were done by Wednesday. And someone's like, what did you do all week? And I'm like, Sunday night I bought the pound dollar and made $2,000. done by Wednesday. Like, so what do you do with the rest of your week? Tan? Right? I tan a lot. I go to the cat shelter. I feed cats, and I pet them, and I groom them, and I bathe them. I watch the Shopping Network. Why do I have to buy 2 leaf blowers? I need them. That's a good deal, but I don't need 2. Oh yeah. Yeah. Where is it? I need a band. I've been telling. I've needed a band for that watch for 10 years. I haven't worn that watch in 10 years. Oh, there it is. Yeah. I found one. Did I tell you this? I found a watch. I was cleaning up my my office. I'm like, what? Can you see it? No, it's not focusing. I'm like, oh yeah, that one's gold. I'm like, oh, I remember that. It's got the Jubilee bracelet though, which I don't like. But anyways, I'm like, oh, I remember that watch. Damn. Yeah. Like, oh, look at Tiffany watch. Nice. Yeah, no, I'm like, oh, it was underneath my printer. So it was weird. Thank you, Ricard. So I propose we'll switch over. Okay. I remember years ago, years and years and years ago, my office just got so messy. It just so stretched thin. So one day I'm like, you know, it's good karma to clean your office, right? I literally like, I'm going to do this only for good karma. And so I'm cleaning, I'm going through my desk, and I'm like, oh, there's something under one of my computer screens. And I reach under with my finger, and I can just feel the paper, and I'm just catching it slightly with my fingernail, and then a little bit more, and I pull it out, like, what's this? It was a check for like $10,000. I'm like, yes! I knew it was good karma. So I'm like, shit, I gotta cash this. I'm like, woo! Yeah. It was still like, it's a true story. I'm like, oh my God, I knew this was going to be good karma. Yeah, got it. I'm going to turn tradethenews.com on. Thank you, tradethenews.com. We're back. Oh, right on, Ryan. It's like people that buy.
Bank of England rate decision due out momentarily.
People that go to car auctions and buy a.
Hike it by 25 for the Bank of England, as expected. Czech Republic also hiking. Note that all members agree that a future rate hike rise is expected to be a gradual pace, and keeping that standard rhetoric.
Slow and steady. Steady and slow. You know what's kind of look good for this? Let's just move
It was
over.
not a unanimous vote.
Oh!
Cooliffe and Ramsden.
Ooh, weakness in there.
So it was 7-2, the hike rates. So Ramsden and Cooliffe were the dissenters there.
Dissenters, that's not good.
By 25 basis.
Ooh,
They
snap.
forecast for this year for 2018 by 10 to 1.7%.
That's vulnerability, guys.
And Brexit reinforcing a market slowdown in the economy's potential growth rate.
Okay. That is vulnerability, and that's what they don't like. So the hike is fine, but the vulnerability to future hikes, whoa, what? And that's what you see here. Because people are not, and this is something that newer traders have to get their arms around. They're not trading this news. They're not trading this hike. Everyone is always trading the next hike. So they hiked interest rates, but not everyone's on board for the next one. Not everyone's on board for this one.
And looking for 2 more hikes priced in to 2020 there in the BOE forecasts.
So that's disappointing for many who are already betting. Okay. Are you going to buy it low, though? You need to decide now. This would be an interesting place. Where are your 2 levels? Okay. Now remember, I have 2 levels here in which, if it fell,
British pound
would be very bearish.
Here.
So if you're a bull, you need to protect these areas.
Traders a weaker pound following that dovish hike.
So yeah, but this is gonna get bad. Oops. Let me make a comment here. They're still gonna raise interest rates. For sure. It's just gonna take longer than what we used to think. So sort of the relative point, I think, would come back. Okay, so let's say they raise, let's say people thought that in the next 12 months there'd be 4 rate hikes. Now they are thinking 3 rate hikes, but that's a hell of a lot more than Japan and the ECB, right? So does this fall from the disappointment and then rise again from the relative difference? The differential, if you will, the diverging central bank policy. Thank you, Mohammed Al-Aryan. I will actually cite the source. I heard in an interview years ago, but probably 2 years ago, Mohammed Al-Aryan releases a paper about diverging central bank policies. It was something that he coined the term and wrote a paper about it. And all of a sudden, like for 3-4 weeks straight, there was all these other idiot talking heads on TV and in the media suddenly talking about divergent central banking policies, and they're not citing him at all. They're just like, oh yeah, now it's common knowledge. So if you want to read something from a genuinely smart person, Mohammed Al-Aryan would be the one to read. And the guy's quoting him but not citing him and babbling out his research without citing him. Now you know to dump those guys. All right, so have you made a decision? What you gonna do? What you gonna do? Okay. So one method would be to sell it higher. A second method would be buying it off the bottom. If you're just making decisions now, you have no bias. For shame. Okay. So if we drop below this line here, that's weddy, weddy, weddy bad. Weddy bad. Bad, right? Bad. You guys still here? There we go, Robert's. Yeah. All right, thank you. Yeah, we got to figure out why there were two dissenters, right? Well, if the way that I saw it, the rate hike came through and it was green candle, and then the release of the dissenters came out, and then whoa. Okay, so there's people reacting to the information, the intel. But if they still raise 3 times instead of 4, right? If they still raise 3 times versus 4, I don't know. I might interpret that, I might interpret that as, well, I'll buy it low. Okay? But then I need to make sure not too low, because I don't make a habit of buying downtrends. So how do I keep this bullish? This is my line in the sand. Now, is an M2 central pivot point an okay place to buy if I'm a bull? Anybody? Right? Yeah. And being the second day of the month, is that a reasonable time to be hitting that if you were a bull? I mean, does it seem right? I need to keep the tense. Wouldn't it be expected if you were a bull to be buying the M2 central zone, the buy zone, the first or second day of the month? Like, you would expect that, right? Not even looking at this. If I said, all right, you're a bull and you want to buy as a swing trader, monthly swing trader, you're a bull and you want to buy, where would you buy it? And would you prefer it occur in the beginning of the month, the middle of the month, or the end of the month? What would you say? Yeah, boom, done. So here it is, the second day of the month. You're in the buy zone. You're a bull. And then you'll say, oh, but Wayne, the news, blah, 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 blah. Well, you is or you ain't, my baby. Is you is or is you ain't, my baby. Right? You're either bull. I love the whole head nodding thing. You either bull or you ain't. So I don't know. Whatever. So yeah, it does make it tricky, but this is where I'm like, you need to have a plan. You have to have a plan. You got to have a plan. You got to be ready. You got to know your buy zones. If you're a bull, you need to know your buy zones.
First down, off its worst level, still down 8/10, 131.40 currently trading. And the market overall, believing going into the rate decision that any hike would be a policy mistake. British pound taking the brunt of that expectation after the fact of the 25 basis point hike. And your gilt yield is higher by just under 6 basis, or lower by 6 basis points, trading just under 1.29%. So lower yield and a softer pound here. The market believes today's rate hike was a policy mistake.
And okay, well, thank you, Trade the News. Oh, isn't it interesting? I must have done this Monday. Help me out, because this is not entirely sure, but I think it was Monday, because it's Thursday now, right? When did I draw this and this? Because I think we did it actually down here, didn't we? But then I would have done this on a higher time frame. I don't think we were here yet, was what I'm getting to. I think we were heading up, and I was guessing sort of for whatever reason, maybe there was a monthly pivot last month, that this was a sell zone and this was a sell zone. Does anyone quite remember? Look for role reversals, Robert. Look for Fibonacci. So under the standard scalping scenario, you have fibbed this move. Okay? And most likely, if you would have had an opportunity to sell within the first 8 seconds. So if you didn't sell that, then you got to switch over to like a 5-minute chart. Okay. No, no. Did I? All right, well then forget it. Yeah. All right, well thank you. Yeah, thanks. Cool. So we'll see how the channel plays out. Yeah, if you're a scalper, you don't even see the entry here because I'm sure this went down, went back up, went down, went up, and then down all in the first 1 minute. Okay. And the second one comes down to how you draw it. Okay. Whether you use the spike after the release or the before the release candle. Now you can see the before the release candle gave you 382 as a bear. But, you know, that's that. Usually you should probably be short more like that and just hold your breath. It's a wild ride and usually not a lot of money. Okay, but what I was suggesting is you might want to use the 5-minute and expect like a much bigger pullback to like 150.50. Okay? But I don't think it takes a rocket surgeon to know to sell this at 150.0000000000000, right? So if you're a bear, however, and you missed this, the most conservative thing is to wait for something like this later today. And you'd be surprised. It might not happen, but it might happen. It often does. Because the bears who sold this quickly on the scalp are taking profit, right? So don't be shocked if this does go all the way back to 50-50 and then drops, okay? But to say that, conversely, if you're a bull, you're supposed to buy this low, and this is the buy zone. So you need to be setting this up long, and hopefully the scalper is getting out of the trade. Okay? So how do you know when to go long? Double bottom would be sweet. Right? Oops. A 5A cross here will show weakness in the downtrend. So longing at the central with a 5A cross up after the drop. I mean, just think of it, textbook, right? You bought at the central in what you believe is an uptrend, but not just the central. It was a retracement back to the central. So if you buy it at the central, you're like, well, I had 2 places, right? Think of it this way. In designing your monthly swing trading plan, you get it? It's just a trade. It's not everything in the whole world. You have different trades for different reasons. You should probably even have different trading accounts for different reasons. Right? That's why TradersWay is good. You can have an ECN account. You can have a fixed spread account. You can have a variable spread account. Fixed spread's good for scalping, for example, right? So on and so forth. So anyways, in your monthly swing, you're going to hold this till Christmas, where at least to the end of the month, or at least to the monthly projected high. Okay? there are two prices, and anywhere in between those two prices are valid. But in particular, the exact prices are valider. Okay, that monthly the monthly CPP. Let's just say 149.74. The next one is. I don't even see it anymore. I guess we'll get rid of this. There it is. 148.94. So 149. Okay. 149 is the most ideal place to catch a bounce. If it bounces at 149.76-ish, cool. Okay. Right now it smells like there are some bears because of the news. So having this drop to 149.00, that doesn't shock me. And then get an inverse head and shoulders pattern down there would be nice if you were a bull. Well, you can't make that decision quite yet, Brandon, because it hasn't given you an entry. Not even on a 1 minute chart. Right? I mean, how aggressive are you? I can't wait on a 1 minute chart. It's too slow. So it still smells down to me. The 5A cross is down, right? The 5A cross down is a sell. The moving averages are a sell. The news event is a sell. Right now, it's still very bearish. Okay? But if it double bottomed here and turned up, that would be interesting because it's in a buy zone. If it came down to 49 and held and then double topped or 1, 2, 3 or double bottom, I mean, or 1, 2, 3 or 5A cross there, then you're like, ooh, that's interesting because it's my support, right? You're not making things up on the fly. What you're saying as an expert, and you should remind yourself of this. Say it out loud. I'm advising myself as an expert, right, that I would consider buying here. And I would consider buying here. It's helpful. Because if this does fall, okay, and it goes boom, 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 that means you have permission to go along, right? But you've decided now. I already know what I would like to do. And if it did that there, I would probably like to buy it, maybe. It's up to me. Okay, so what if it trickles down here and now we get a 5A cross higher, high, higher, low scenario? See, all of this is helpful and useful if you're already a bull. Has nothing to do with the news. It has nothing to do with that volatility. You were a bull yesterday, you were a bull the day before that. I will remind you, the pound yen, this is pound yen, went up 1,400 pips in September. There's cause to believe that you might still be a bull. What caused the pound yen to rise 1,400 pips? What caused it? Don't say 5A cross. Don't say CCI ADX combination. Don't even say seasonality, because that's not quite true. Because all the yens would have risen based on seasonality. Bank of England, can we get a little more central banking policy? Expectation of the Bank of England needing to raise interest rates to fight inflation created by an overly weak British pound created by Brexit. It's the end of the union as we know it. Right? 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 I remember having conversations in the summer about when things get bad, it's the central bank's job to do something. And that's what creates the value of the currency, the policy. Usually it's the central bank policy, monetary policy, because governments are slow and stupid. So we very rarely get any fiscal policy whatsoever. So policy is generally monetary policy, right? Do you remember we talked about things like the scenario when the U.S. economy looks like it's going to collapse, and the end of capitalism is near, the U.S. dollar is super strong. Yeah, yeah. And when things are awesome and America's rich and import data, export data, sales data, right? All this stuff is really good. Americans are buying houses and cars, and they're like, oh my God, I got to upgrade my appliances because my neighbor got nicer appliances. GE profile? Oh, well, I'm going to get a Wolf, and we'll see who's best, right? Well, right? When you're in a world like that, the dollar's weak. Hey, in Dubai, there used to be things like one sheikh says, I own 27 Caterpillar bulldozers, and I have them parked in the desert doing nothing. And the other sheikh says, what? So he calls up Caterpillar. He's like, I need 50 bulldozers. And they're like, well, what are you going to use them for, sir? We can customize them. Oh, I'm not going to use them. Just send me a bunch of Caterpillars. I need, make it 60. Boom. Like there were times like that where your bragging rights were about how many Caterpillar bulldozers you owned. No joke. Right? When your plane needs to be bigger than your neighbor's plane, when your yacht needs to be bigger than your neighbor's yacht, right? That's when the dollar's weak. Right? When Greece is on the brinks of collapse and the European Union is over, the euro's at 145? Remember those days? And right? In those days, we set this up like, I think about 4 or 5 months in advance that the euro was going to collapse, and we had it all tied around a particular meeting. I can't remember which meeting it was, but we had it all set up to collapse, and collapse it did. It's fantastic. I think it had to do with the rollover, right? Because the reason the euro got strong was Draghi's, I'll do whatever it takes to protect the euro. Boom. Money flows there because of the opportunity. So, in this case, the economy, the real economy in the UK is not significantly different today than it was 6 months ago or a year ago, right? It's still pretty bad. There's still a lot of risk. We don't know hard exit, soft exit, exit this, exit that. What kind of deal, pay the EU, not pay the EU. Nobody knows. I mean, it's all risk, right? And because of that, the pound is punished. So the central bank is forced to do something because it's their job. You wake up in the morning, right? What does Carney say? You got to deal with inflation, eh? Hey, Carney, you worried about inflation with that devalued pound? Oh, for sure. Think you should raise interest rates, strengthen up that pound. Ooh, is that rate? Okay, so yeah, it's the policy, and even more important, the expected policy of the central bank to raise interest rates that they know will attract money and increase the value of the Great British Pound. The economy sucks, blah, right? But the pound is strong. And yet amateurs will say, oh, well, the economy sucks, so the currency will suck. That's not necessarily true. No so true. Peter says, I think it'd be a surprise to see any future rates fall next year. Why? Because it's November? Right? Well, it's not a big stretch. So you're basically saying, is there one more BOE meeting? Is there a DEAS? Oh, in 12 months. That, I wouldn't agree with that. You'd be surprised to see any further rate hikes. So what is the interest rate now? That's not a magic number. I say they jack it up to 1, right? Because it's 1 in the United States, like somewhere between 1 and 1 1/4. Well, pick one, 1 1/4 or what, whatever. You know, within 12 months, raise 2 more times? Yeah, of course. Ask yourself, how many live meetings does the Bank of England have? And those are the ones that are going to raise. But, I mean, but see, that's your call, right? So if you interpret this like, that's it, right? No more hikes for the next 12 months, then you need to play this sell. You need to sell this high, right? All right, help me out here because I'm having a brain fart. I'm old. What is the mandate for the Bank of England? The mandate is, are they supposed to worry about wages? Are they supposed to worry about jobs? No. So the hell with wages. Well, wages lead to inflation, sure. Okay. But are they dealing with that now? No. They're dealing with inflation from a devalued Great British Pound created by Brexit. Okay. Price stability is the same as inflation. Okay. So you got to Google things like purchasing power parity. Okay? And if foreign goods in London become outrageously expensive in terms of pound, then that's inflation. Should be roughly the same in euro. Should be roughly the same in dollar. But in pound, if a Swiss Rolex costs significantly more, you're like, wow, this went from 50,000 pounds to 100,000 pounds. That's inflation in terms of pound. Your purchasing power has diminished. The way that the central bank deals with that, because you can call that inflation. The direct way of dealing with that as a central bank that has only one mandate to deal with that one problem would be to raise interest rates. That's what you do. That is what you do. That is the solution. There are 2 banks. I think this is straight out of my book because it's straight out of my brain, so bear with me. There's 2 banks. They're across the street from each other. They both have good customer service. You need a bank. They're just as far from your job. They're just as far as work. They both have easy, convenient parking. They both offer you a toaster if you open a savings account. Cool. So you need to make a choice. One of them pays you 1% interest. The other one pays you 1.5% interest. Which one do you pick? Yeah. Peter says, can the economy cope is a question. That's not your question. That's not even the central bank's question. What did Paul Volcker do in the United States when inflation was high, when mortgages were 20%? What did Paul Volcker, chairman of the Board of Governors and president of the Board of Governors, chairman of the Federal Open Market Committee do? He killed the economy. It's not just raise interest rates. He killed the economy. 1 year later, the United States was good again. It was in an inflationary period for about 10 years. Jimmy Carter from Georgia, probably a pretty good president. He'd been around as a diplomat and everything ever since. He was probably pretty good, except he put an amateur in charge of the Fed. Kind of what President Trump is doing now, picking a head, right? So he picked an amateur, a weakling. Inflation got worse. So that guy was thrown out. Paul Volcker comes in and killed the economy on purpose. So I'm just putting history into perspective, right? So we're having a great conversation amongst currency traders here. Was it Peter? I think it was Peter, right? And I'm like, hey man, who cares if it kills the economy? It's, right? Who actually created all this mess? I can tell you, Mark Carney was cursing. I'm sure of it. Probably threw his chair around, drank a bunch of Labatt's that night like a true Canadian, eh? Down some whiskey. Was Brexit. He's like, you gotta be kidding me. You gotta be kidding me. I just fixed this economy. You flew me in from Toronto, eh? From Ottawa. Fly all the way to London to save this stupid English economy. Right? So now he fixes the UK economy, and then what? Yeah, let's pull out of an economic union and put up borders and let's kill trade. Yeah, let's kill trade. Let's kill it. I'm sure he just went, oh, you stupid sons of... Right? And now he's like, and woo, the pound just tanks. He's like, oh my God, did the Great British pound just lose 50% of its value? Gee whiz, son of a... So now he's got this problem. He just saved the UK economy, and now, as you point out, he's going to have to kill it. Kill his own baby. Yes, he has to jack up interest rates. Look at his job title. Right? Price stability. The value of the pound is when volatility just kicked up with prices. He's like, son of a gun. So now he's got to jack up interest rates. Nice. Not his problem. He didn't create it. This wasn't a Bank of England problem. This was a government problem. Right? There are a lot of people in the United States that hate the Fed. They think that it's conspiracy and all that kind of stuff. What did the U.S. government do to save us? What did the U.S. government do to save the world? Cars for clunkers? And was there anything else? And was it? So it was like only the Fed. Oh, you got a couple $100 out of that? Yeah, I don't. I do kind of remember that now. Yeah, that'll do it. But what I'm saying is, like, this is a fiscal problem. The governments created these problems. Governments didn't do anything to solve the problems. So anyways, Mark Carney's got to jack up interest rates. It's not his problem. He didn't screw it up. It's going to kill the economy. Yeah, well, his job is to save the pound. Same thing with the ECB. It's his job to, right? Mario Draghi saved the euro. Remember? He said, I will do whatever it takes to support the euro. What happened 1 second after that happened? Oh, he did, John. Oh, he did. No, I disagree. Now, the ECB is flawed, and I think the whole government stuff is flawed. No, but I'm telling you, as a central banker, what he did was brilliant, actually. Okay? So, the euro had been tanking at that point. Interest rates in Greece were 20%, and about, like, what, 18% in Spain. Ireland was on the brink of bankruptcy, right? Portugal, Italy was next. Then if Italy fell, then Spain would fall. If Spain fell, France would fall. If France fell, everyone was going down, right? Okay? Right? This is what happened. And then he said, and I remember, I was there, the whole thing, right? I will do whatever it takes to save the euro. And the euro skyrocketed in value because what he did was give an implied, what would be the right word? Like bailout? A guarantee, if you will. He gave an implied guarantee that if Greece went bankrupt, if Greece defaulted, and this was the huge concern, like literally we thought it was the end of the world. I had a couple of times where I thought it was going to be the end of capitalism. In the last 10 years, it happened twice. Kind of interesting, right? So anyways, it was very real that if Greece fell, then the rest of the pigs were going to fall. And then that's going to, and if Italy went, that would take Spain and all this, right? So anyways, so he said, I will do whatever it takes. Now, it's not a guarantee. It's implied. So he didn't have to do anything. He didn't have to sign a contract. He didn't have to put up any money. But he needed to save Greece so he could then save Ireland and Portugal so that Italy wouldn't be so bad. And so he could save Spain. And then France would be okay. And then Germany's Germany, but right, all this kind of stuff. And Germany was sick of bailing everybody else out. And nobody cares about the Dutch, but they should because the Dutch are probably bailing out the Germans. Okay, so he said, I'll do whatever it takes. Implied guarantee given. And all of a sudden, waves, I'm telling you, waves of money started going to Europe 1 second after. And it lasted for probably a year or more. I can't remember exactly how long, but a long time. But it happened that second. And what happened was hedge funds started buying Greek and Italian Portuguese, and Spanish bonds, because now, get this, you earn 20% a year. And the ECB is going to guarantee it, implied guarantee, that if Greece defaults, they'll bail you out. 20%. Guaranteed. Holy crap. So money just started flowing to these regions. Now guess what? The other way of dealing with it is for the ECB to print money, right? Quantitative easing, and give it to those economies. But instead, he said, somebody needs to give these economies money. Somebody needs to stabilize these interest rates. The reason the interest rates were at 20% in Greece, for example, is because nobody would lend the money. That's what happens. So money goes to the highest bidder. It's like an auction. And all of a sudden, like, nobody is lending Greece money. So they're like, how about 15%? No. How about 16%? No. How about 17%? No. How about 20%? Like, I'm not going to lend you money because you're 5 seconds away from defaulting. Why would I give you $100 billion if in 5 seconds you're going to say, oh, well, we're out of money, we're never going to pay you your money back? 20%, if you go bankrupt, is you get nothing. It's 0%, right? You even lose your $100 billion. You're like, I'm not going to give you $100 billion if you're going to die tomorrow, right? It's like why 80-year-old people don't get 30-year mortgages. They're like, well, the bank's like, well, we've done our due diligence and we're concerned about your ability to pay back the 30-year loan because you're 80. Okay? Same thing with Greece, right? So what would an 80-year-old need to do to get a bank loan? Have someone second the mortgage. Oh, well, my grandchildren will take over the mortgage if I die. Nice. Now we'll lend you the money. So in this case, ECB is like, well, we don't have any money. The ECB is not quite the Fed. They're not the reserve currency of the world. So they're like, oh, I know what I'll do. I'll imply the guarantee. So all of a sudden, Greece says, well, we'll pay you 21%. Still, no one's lending Greece money. And then ECB says, well, we'll guarantee that, quote unquote. And all of a sudden, people were stumbling over themselves to get their money to Greece. See the difference? Would it be a bluff? Well, they can always print money and bail them out. Now, your euro might be worthless, but you'll get your 100 billion euros back, and you can go buy a loaf of bread in Germany, like after in Austria. Remember Germany and Austria after World War I? You need a wheelbarrow full of Deutschmarks to buy a loaf of bread. Well, at least you got your 100 billion back. Enjoy your loaf of bread. But it is a guarantee, right? Or implied guarantee. So all of a sudden, all this money went to these economies. Suddenly, money just rushed to Greece and Ireland, Portugal, and Spain. And interest rates came down, right? The economies went up, and the ECB didn't spend a penny. Both free. Now we're not even talking about Greece anymore. I was saying, hey, why don't you buy a Greek bank? Buy something that makes money in Greece. Buy it cheap. All right? And by the way, the ECB solved the Greek problem. Remember how all the politicians were like, remember it? What was his name? Cyprius or something? They talked for what, a year and a half? Do you remember what solved the problem? The ECB pulled the cash. They had one weekend. People would go to the ATM, there was no cash, and they all folded. ECB solved the problem too. The politicians didn't do jack except talk. Well, we didn't get enough concessions. Boom, give me your money. Okay, we agree. Right? So anyways, these are not the problems, right? That would anymore. It's kind of interesting. Now, are there flaws in the ECB? Yeah, well, the ECB is designed in such a way that how could the ECB deal with the German economy versus the Portuguese economy versus the Greek economy? Help me out here. Because what's good for Germany is bad for Portugal. It can't. It doesn't. It's not its problem. The Greeks, by the way, were lying. That's why the ECB didn't catch it. Like, oh, wait, you're dead broke? Because when you're part of the European Union, you have to meet certain guidelines. So you could avoid risk like this because they're like, look, we're the ECB, we can't possibly manage every economy. And they're all sovereign states. It's not like the United States of America. Greece is Greece. It has a Greek government. Right? So anyways, well, if you're going to be part of the European Union and use the euro, for example, that's definitely part of the monetary union as well, the EMU, right? So you're going to be, but then you got to at least meet these basic guidelines so we know you don't drag us down. Turns out they're all lying. Right? Ireland's lying, Spain's lying, Portugal's lying, the Italians are lying, the Greeks are lying, the Germans are probably lying too. Who knows? They're all lying. Good. Guess what? That's what happens. It's like saying, well, Wall Street's lying. Well, but they're lying. The cool thing about Wall Street, though, and I'll stand up for Wall Street, is they usually, unless you're a criminal, then you get what you get. Criminals are criminals. You can be a criminal used car salesman. Doesn't make all car salesmen bad, does it? But anyway, so Wall Street is great because somebody gives it rules, and it's the pathetic government that's doing it, right? The sucky, pathetic, stupid government. But they're trying to protect the people, so that's cool. You got to love that. You got to love it. The problem is they're incompetent. But anyways, the incompetent people give you rules. And then think about the guys on Wall Street. They're usually wicked, smart, Harvard a-holes. Right? Right? So you got the wicked, smart, Harvard a-holes, and they receive a bunch of stupid rules and regulations from the stupid people, government. And then they say, okay, we are going to scour this, and we are going to look at every single rule, and we will figure out how to maximize our potential profit, right? Like our production possibility frontier curve, right? What's our profitability profit production frontier curve, and how could we bend this and twist that and get into there and do this and maximize and cut costs and increase returns, and how can we make as much money as we possibly can without breaking the rules? You can twist and turn and interpret, but you can't break it. And that's what wicked smart people will do. Hey, give me the rules of the game and I will win. Right? The coolest thing about Wall Street is they're really smart and they're really hard workers. Right? These are the people that work 20 hours a day over the weekend to get a deal done by Monday morning. It'll take the whole office, the whole team, bringing the accountants, bringing the lawyers, bringing the partners, bringing the staffers, bringing everybody. We're going to get this done. It's going to be done by Monday. We're going to do it well. Boom. Yeah. Government's like, oh my God, the economy's collapsing. It's the end of the world. What are we going to do? Nothing. So now, yeah, and then back. So if we're gonna, wow, we're really talking now, huh? Anyways, if we're gonna go back to like the collapse, that was a big cluster all the way around, right? And that's where you get situations where liars are lying to liars who lie to other liars. And it's bad, right? But all of that did start with the government, right? It was decided that owning your own home in America was the American dream, and there were government agencies put in place, right, to make that happen, which then then all of a sudden that creates sort of like there's all the, let's say, just think of it like government money, okay? And this is part of GDP, by the way, right? Government money, and they're like, we want to put a whole bunch of money over here so that people can get housing. Well, all of a sudden you're like, the government's really stupid. I'm telling you, like, do you remember Geithner? Do you remember Geithner? After the economic crisis, when they introduced him with the big plan that he was going to save the American economy and save the world, he came out and people are like, oh my God, this guy doesn't even have a plan. And he was supposed to have a plan released the day before, but they canceled the press conference. They're like, why would you cancel the press conference? This is when you release how you're going to save the world. They're like, oh, he might not actually have a plan. So the next day they do the press conference, and he comes out and he looks scared and he starts sweating. They're like, oh my God, this guy's not going to save the world. And it collapsed. So anyways, then he gets aggressive. And then he calls up all the major banks. Hey, how much money do you need? And they're like, we don't need any money. Well, take 50 billion. And they're like, we don't need 50. Take 100 billion. Like, banks are saying we don't need it. And they're like, you have to take the bank money because Bank of America took the 50 billion. So now JP Morgan, if you don't take at least 50 billion, people will know that Bank of America is in trouble. You're not. So everyone's going to withdraw their money, run on Bank of America, collapse Bank of America, and go to you. We can't have that. So you have to take the 50 billion or we'll kill you, right? They're like, okay, we'll take your stupid 50 billion. But you know what happened after all that? Where the government, this is Geithner now. This is the Treasury. This is the government. Here, take the 50 billion, take the 50 billion, take the 50 billion, take the 50 billion. Every single bank, you have to take the 50 billion. And they didn't have any tracking. There wasn't any specific goals. They're like, this is how you need to spend it. You need to allocate it here. You need to allocate it there. You have to do this. You have to report back to us. We're going to have a tracking methodology to make sure you invest it wisely so you can save the economy. There was nothing. There was like, just take it. And all of a sudden you got like some of the banks, like I think the guy at Bank of America actually, he's like, well, I spent $3 million redoing my office. And I think JP Morgan was like, well, I bought a new jet with it. And they're like, no. And the government spent like $1 trillion, maybe more, probably more. 1.3 is hitting my mind. 1.3 trillion given away, no strings attached, no tracking methodology. What? Are you 5? What? Think of what kind of business would do that. Would Google just say, we're going to invest in technology, we're just going to give every startup in Silicon Valley $100 million. They can do whatever they want with it. They don't even have to communicate to us. We're not going to ask questions. We're not going to have any goals. There's no reporting mechanism. We're just going to give it away and hope for the best. Like, what? What? So I'm a little biased, if you notice. I'm a little biased. But at least, you know, but I have to be biased as a trader, right? But I'm like, oh my God, that actually happened. So I don't even know what we're talking about anymore. But we were there. I was there every single second of the day. Holy smokes. So we were talking about ECB. ECB. You don't have to like the European Union. The people that hate the European Union the most are the people that live in it. I get that. I'm not European. I don't have the right to talk about it. I used to love the idea of the European Union. Okay? Cool. But I don't have the, and John does, right? But I'm a macroeconomist. I'm a currency trader. I do have the right. I'm an investor. I have the right to comment on the ECB and the euro. And I think they did a great job. Honestly, I think that was great. I think they did a really good job. Breaking down the sovereignty of it. Wow, I'm not talking about that. I'm talking about, here's the rules, play by the rules. If you don't play by the rules, you're gonna get what's coming to you, but we have to save everybody too. I think it was a pretty reasonable thing. I mean, just think of it. He said, I will do whatever it takes to support the euro. And he did. The euro went from way down to way high, right? So when people start buying, right, 20% bonds from Greece, what happens? Well, first of all, Greece doesn't have to pay 20% anymore because the day before, the minute before that announcement, right, the minute before, Greece was looking outside the door and there was nobody outside with bags of money. Nobody. And they're like, oh my God, we are choking on our own economic blood. There are riots in the street. People are going to starve. And we can't borrow money. We can't pay employees. There's no one picking up garbage. There's no one treating the water. There are no bus drivers. We are screwed. And no one will lend us even a penny, even at 20%, which is going to bankrupt the country anyways, but they still can't borrow the money. 1 minute later, there's 100,000 people with wheelbarrows full of money begging to take it. So who are you going to take the money from? Like, well, maybe we don't have to pay 20%. Maybe we don't have to pay 19%. So what happens is the interest rates come down as the buyers are standing there. So the first wheelbarrow goes up there like, here's 10 billion. All right, here's 10 billion of bonds at 20%, and he leaves. But prices went up because 10 billion entered the buying. And the next buyer comes on and buys some more up. Prices go up. Greece doesn't have to pay anymore. They got another 10 billion. Great. Interest rates are falling. Next guy comes up. Here's some more money. Boom. Here's some more bonds. Prices are rising because there's only buyers now. You see that? Nobody's, right? It's just Greece writing bonds. Here's some bonds. Take some bonds. More money, more bonds. But each buyer jacks up price, lowers the amount that Greece even has to pay. Because someone might say, well, it used to be 20%. How come you're only paying 17%? And Greece says, well, you don't like it? Get the hell out of the way. I'll take the, hey, anybody in line want to pay 17%? Because this a-hole won't pay it. All of a sudden, there's like 100 people like, we'll take it at 17. Get out of the way, bro. All right, I'll pay the 17. Right, I'll take the 17 and that's it, right? So it's literally like an auction. And so prices of bonds went up, interest rates fell, Greece got their money, didn't cost the ECB a cent. I like that, man. That actually happened. 1 year later, those bonds rolled over. So let's say you were the first guy in line, you got a 20% bond. 1 year later, what happened? Interest rates went from 20 to 2. 20%. You're like, dude, right? So Greece says, hey, do you want to roll this over? Roll it over. I used to get 20%. Well, yeah, well, now we pay 2%. We don't need your money anymore. What does a hedge fund manager do? Last year he made 20%. We don't even have to sell it. It's just like, do you want to buy more? Because it's matured. 1 year later, it's matured. Do you want to buy another 100 billion at 2%? Right? 100B at 2? You got to get the language, right? 100B at 2? Hell no. And you bring your money back. What happens to the euro? Came back down. That's how we knew the timing. That's how I did it with the US too, by the way. I once set up does anyone remember a 5,700 pip trade I called live? I think it was in 2007. That's right, I was in Spain. The 2007 FX Street conference, I called out to the date a 5,700 pip drop in the pound yen. I was right. Actually, I was wrong. It fell like 9,000 pips. Yeah, I was conservative. Boom. So anyways, I've enjoyed talking with you guys. I like hanging with you. You're good people. I think we got a little technical in there. I think we got some news in there. I think we've just been chatting like friends. Although I do a lot of talking. I feel like I dominate our relationship. Yeah. Have you guys seen the commercial? I think it was a Yahoo commercial. There's a man and a woman, an old man and an old woman sitting in a log cabin. Have you seen this one? And they're really rough looking, right? And in a log cabin, they've been in the woods forever, right? And they're eating breakfast. They're eating cereal. And the woman's eating, and all of a sudden, splash in her face, right? Cereal. And you're like, what was that? And then it shows the man, and he's got a monkey on his shoulder. And the monkey's laughing. Ah, 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 ah. So you know what the next scene was? The next day, they're eating breakfast in the log cabin. I don't know why they're in the log cabin, right? And the monkey, this time you see the monkey reach into the bowl of cereal and throw it, right? Throw it at the woman. And she has a toucan on her shoulder, and it catches the cereal. I mean, it's just like cool. So we're, I don't know even what that has to do. But anyway, somehow that reminds me. So we are going to make a change though, right? You're posting trade plans. So maybe next week, it'll be you doing some talking. You will have a toucan on your shoulder. Just not me and my monkey. Are you posting your trade plan today? Yeah, Ryan. If you're using other people's data, you should cite your source. Yes, that would be the proper ethical and legal way. What I don't like is, I'm the world's greatest trader. You would have made 4,000 if you made this trade, paid $398, and you too can be rich. That stuff can disappear. So anyways, peace on earth. May the pips be with you. May your profits be above average. See, is it? Oh yeah. So tomorrow's non-farm payrolls. Yeah. I will see you tomorrow at fxstreet.com. Cool. See you there. Thanks again for being a client to TradersWay. I appreciate you. We appreciate you.